Welcome everyone. This is the London session live stream on TopstepTV. If you are here for the first time, my name is Deeyana Angelo. I've been trading for about 17 years, and 12 years out of that I've been trading the futures markets, mainly crude oil and gold, but also sometimes equities. However, energies and metals are really my sort of core focus. Obviously, it's a big day today. We have the U.S. elections, right? I can see already people in the chat asking, like Paul H. Is asking whether this is a no trade day. Well, they've locked up our live accounts. You know, that can tell you a lot about the sort of risk that the risk team is expecting. So yeah, we'll definitely. The way I'm approaching this, I'm taking this as sort of like a half week off. Ah, yeah, full screen. Here we go. So yeah, I would like to have a few days off. Obviously, I've been on a bit of a heater in my exit phase. I took a payout, so this week I'm just waiting for that to be processed. I don't intend to do a lot of live trading of any sort, at least not until at least Thursday, Friday. But I do have a couple of combines that I'm working on, so maybe if we see something, we can plop in a trade in there. However, I really wouldn't advise you to go into, tonight, especially after the votes are being counted and everything. Just don't trade. It's going to get crazy. I've lived through quite a few elections before, and it's always that headline risk that is very, very volatile, difficult to predict, and if you are trading live, so this is not so much a problem for the sim accounts and XFAs because that's the sim server. However, in the live markets, it's very likely that the markets will be thin. There will be no liquidity. However, that brings more volatility into into the mix, and it means you might get stuck in positions. That's always a risk with any high impact release, and out of all of them, the US elections, they're probably one of the biggest that you will ever see. So if you've never traded elections, just break out the popcorn, sit down and watch the show, but don't try trading it. It's just not worth it, and it would be gambling. To me, if you're trying not to gamble, trying to work on this as a skill, just don't trade the elections. Take it as an observational, experiential data where you're not involved, but you're still observing what happens. And you can journal through it as well. You can definitely journal through it. Just don't try and actively trade it. Now, let's have a look at what's going on in the markets. I'm going to focus on ES chart here because I know that equities and gold are usually the most sensitive products. Yeah, all in. Yeah, I can see Bruno is saying, yeah, all in. Let's full port it or pulled pork it, as they like to say. Yeah, so we have a bit of consolidation ahead of the elections. Not surprising. Why? Because they're waiting to see the outcome, right? Is this an unusual thing to see ahead of such a big release? No. It's actually pretty expected. Now, where is this whole consolidation happening? It's happening at the bottom of the previous range. So if you look at the area slightly to my left, between 51.2150 and 57.70, that's a demand area. Now, we smacked into it pretty good, but then since that happened, we haven't actually moved away from it, and we're still holding the low. So at the moment, from a technical perspective, which probably won't mean much for the elections, but from a technical perspective, we have some sort of an accumulation, consolidation. You can call it a price agreement, right? If we didn't have the elections, I would say that this would be an interesting area to try along potentially. But if this breaks, if it breaks down, it is a change in the market state. We don't know how the elections are going to be digested. We have no idea. Nobody knows that. But using technicals to try and figure out the new market state is actually a decent way to look at the overall picture. And that's how I do it, right? I look at about 30% macro from the events that matter. So not from everything and anything, but bigger releases, bigger things that can cause an underlying shift in the overall relationship between the interest rates and the equities markets, gold and all of that. And that can help you stay on the right side. Now, this is just the bigger picture, right? This is the daily chart. It's pretty large. And we can see that there is some volume that is being built in a pretty large area. We were consolidating, then we went down, then we went back up, consolidated again, went back down. So all of that builds volume. So now we have this area that is seemingly causing yet another slowdown in price. But once the votes start coming in, that could probably just get smacked through. Like, it doesn't really mean all that much. Let's see what the question is. Does technical analysis just not work on election day? I would say it does work, but not on intraday time frame, right? So it's probably going to be a case of them pinging between larger supply and demand areas. So if I take another rectangle, there's another supply up here. And what typically happens with very volatile products or very volatile releases is that the large time frames will be in play. So it's a good idea to have a 4-hour or a daily chart on one of your screens, just to monitor where these extremes are located, and then to try and maybe orient yourself to that. But again, don't try and trade it, because for the most part, the algorithms will be trying to sift through all of the incoming data. And I'm sorry, but as a human, although we're very functional and we have some advantages that maybe an algorithm doesn't have, speed of execution is not one of them. So to me, battling it out with algorithms is always going to be a losing battle. And I don't want to exert my energy on those sorts of activities. I want to look for strong setups where I can control everything emotionally and technically and tactically, if that makes sense to you. But yeah, some of the levels on larger time frames will work because let's say that we have a very violent move up. Well, there's going to be some sort of a ping back from this level, from the supply on the opposite side. And similarly, if they start smacking it downwards, well, if the level is far enough away, at some point there'll be some algorithm that's going to be fishing for that. So the next area down will be this one. But, it's probably going to happen so quickly that you won't even be able to realize what's happening. Touches of these larger time frame areas literally happen within like nanoseconds. And then it keeps happening. So as the votes are being counted and as the results are coming in, everything is going crazy. Then there's a bit of a slowdown. And then more votes come in, more changes of sentiment. And then they kind of go crazy again. And then only the next day, you can actually go, all right, all the votes are in. We know the outcome. Now we can put in that bigger position to maybe run a swing trade. Now this week it's a bit difficult because we have an FOMC also on the Wednesday. So tomorrow we have that little monkey on our back too. So because it's such high risk, I'm actually taking a break at least until Thursday. But I don't know, I might even take like Thursday and Friday off, just call it a week. And, just chill out and take this as an opportunity to have a bit of a rest. Obviously, I'm still doing this for the next couple of days. We're going to have, actually, I think we're going to have Paul H. joining us on Thursday. And we're also going to have Coach Ray. So we're going to have a bit of a party here for the London session. But it will be a perfect day. Thursday will be a perfect day to digest all the stuff that happened from the elections and then to see whether we have some nice swing opportunities. And those sorts of times are the times when you want to look for trades that can last you for, those trending moves that can last for about 4 or 5 hours and give you a nice big risk reward. I tend to do that usually after FOMC, so I will look to see what looks the best. And that's the time that I might run an overnight trade in either an equity or, crude oil, or even Nikkei. Nikkei is a very good product. Right now, Nikkei is not really in any areas that I would want to run those sorts of trades from. So let's have a look at that. But if we dip down all the way to 38,340, so let me mark that. So that will be my first sort of area, 38,340, where this 4-hour demand is located. Let's move this to red to give it some weight. So this would be an area of interest for longs if we survive the elections, right? If this level doesn't break down. You can see there are definitely some buyers in and around this entire zone, like this whole zone. But this is a reactionary zone that is smaller and easier to maybe time your entry a little bit better. If we carry on higher, I'm probably not going to be interested in Nikkei until we reach over 39,000. And maybe even closer to 40,000. So, yeah, again, it becomes one of those very large zones where from this supply and then all the way up to about 40,100 maybe. That would be my area to scan for some swing type reversals. And if this demand survives, even though I don't think it will, like if it starts to go down, we're probably looking at even lower areas. Let's scan to the left. Yeah, and then we sort of have, that was broken, we sort of have a level, all the way down here, which is 3650 or 36,500. So those are kind of big swing type areas that I'm going to be watching. So yeah, it's going to be interesting for sure. This morning, it's still a bit early for me to try and find something. Platinum is arriving at the value area low from London, so maybe we can have a look at that. And I'm going to put 2 charts on here. Move that over there. So platinum, daily chart, we're in a bit of an unclean arrival zone. So all levels from the other day. And then as I start to go down to my intraday time frames, again, on this, I don't have my TPO profile, so I'm just going to show you for 3 seconds what we have. So this is the London value area from yesterday. We are arriving to the London value low. If we cannot break through this, I will be looking for a failed auction, which I might want to front run if I see some sellers stepping in. And then we can have a look at some shorts in platinum. We're sitting around sort of ballpark the round number of 1,000, so 1,001. And I do have some levels all the way up to 1,006. If we manage to go even higher into a value acceptance, I have nothing until like 1020. So I have a couple of hypos. So value low reversal is one into a failed auction. The second hypo will be value acceptance and full rotation through value. But yeah, apart from that, some of the other products, they're not looking that great. Like crude oil is breaking out. Don't like to do breakouts for London. At least not until we maybe go back to the initial balance at 71.76. Gold is sort of reversing, but the levels are not good here. So that lowers the probabilities. Copper, Copper is still inside the initial balance, so that's a no. Even though copper has been moving a lot, it's been a bit tricky recently. All right, let's see some more questions. Mo says, I normally trade ES. What is the average points range in movement? If you're looking for average true range on ES, you can easily find that via the ATR indicator. So if I go to ES, there is an ATR indicator that I'm running on this particular chart. Now on the 30 minutes, it's about a six, let's say 6.5 handles, so 6.5 full points of movement. So that's like ballpark 25 ticks. Now, if you're asking me about the average session range and average daily range levels that I use as levels rather than just to figure out the rate of movement, that's another thing. And I can tell you that on ES at the moment, we have the average session range at about 186 ticks. And if I divide that by 4, that brings me to 46.5 points. So 46 handles for the day. For the overall 24-hour range, it's a little bit bigger. It's sitting at 215 ticks, which is ballpark about 54 points. So hopefully that helps you. The way I plot those, there are dynamic lines that we have our Blotic and DR indicator working. So that's pretty cool. And it means I can automate a lot of the stuff that I'm doing here. Many of us who've been doing this for a long time, we have pretty sophisticated charting platforms and software. And you know, then we use something like Topstep as just execution platform. A lot of people do that. You know, you've seen Nick for a tick. He's got motive wave, and then he executes on Topstep. And similarly, you have Coach Jay. He uses Quant Tower, executes on Topstep. So we all have like our own ways of automating our processes and using the tools that are pretty good for us. Obviously, Topstep is a great platform, but it's still in development, so it's going to take a while before you can have all of the sophisticated charting tools. So for me, I'd still rely on my Blotic indicators over on the other screens, which is why I'm able to kind of spew out these levels pretty quickly, because they are, for the most part, automated, right? Lazy Lion says, where can a newbie learn more about how options or option expiry can influence a futures trading decision? People watching SPY and QQQ and have option levels on their charts. Yeah, I have those as well. Now, there's loads of places. Like, I think even on YouTube, you have so many options traders. However, that's going down a rabbit hole that you probably don't need for this purpose. So I'm going to say that the way I use the options levels is just to look at where the most open interest is. And, you don't even need anything super sophisticated. You can look at something like bar charts and then find the options chain that you're looking at. Like, for example, let's say this is what? This is platinum. So for example, if I look at platinum over here, this is the platinum January 25, which is the options for the current front month. And then over here you have open interest and you have some prices next to it. Let me make that bigger. So basically what you're looking at, these are where the calls are located. So where are the calls with the most interest? And you can see one sitting up at 1050 with 2,412 positions. So that indicates open interest. So that's pretty large. But is that, the next question I ask myself is that within the day's reach? Probably not. So then you go to some levels that are closer by. We have 1,656. So not nearly as large, but still it's a pretty useful level, right? Now, these are calls. Now, calls, basically, the way I like to use them in most occasions is when the price is rising up to a level, you might see that this 1050 level acts as a resistance, because at that point, the market makers have to get involved. They have to hedge their positions and adjust their inventory. And similarly, if we have put levels, so here are the put levels. So where is the open interest there? Well, a lot smaller, right? It's a lot smaller. But again, here's a level of interest again around that 516. So there's put support there as well. It could act as a supportive level. So that value acceptance trade could very well be on the cards for platinum, which means that my value low reversal is no longer a thing, right? It's that hypo has less probability of working out if you know that one of these bigger options levels are being supportive. And that's it. Like, I don't really go down the rabbit hole of figuring out what sort of spreads you might have there and stuff. It's an entirely different way to use the options levels versus trading options. So trading options is an entirely different strategy. Typically, you will be, mixing and matching, let's say a long put and, a short call somewhere to protect that. Or, something similar that will create a more sophisticated control over the maximum risk and maximum profit that you can achieve on options. And typically, a lot of the options, especially if they involve any kind of selling of the options, they're either done for protection of the option or for generated income, depending on which side. The strike is higher or lower. But let's just not go down the rabbit hole of options trading. Bottom line is the way I use the options and the way many people who are utilizing options chains, it's just another line on the chart. And then you still have to have your tools. So it's not enough to just go, oh yeah, whatever, I'm just going to plop another line and that's going to be resistance, because those levels can get broken, and then you can use them as a back test as well. But you need other things to figure out whether you're too high up on the day, whether another breakout from that level is high probability or low probability. So it still takes a lot of skill. I would first master the regular levels, your VWAPs, your support resistances or supply and demands, your volume profile, your TPO profile, and then as a cherry on top, maybe at some point add the options levels to have a bit more confluence. But just having options levels on the chart, it's not going to be enough to give you the full sentiment and market state on the day. For me, that comes from something like the TPO profile. So if I see that the initial balance is extended to both sides, I would be a lot less likely to do a breakout trade, because at that point the probabilities of a breakout trade fade down to 8%. So even if I have an area that I might see on the options chain, let's say 1050 in platinum, I will still be like, yeah, but we have a neutral day type. Like, how likely is it that this is going to keep going? Oh, 8%. Do I want to be involved in an 8% probability trade? No, probably not. So, things like that is what's going to make a difference from a technical perspective. All right, so let's have a look at some of the other questions. Can you explain what the London value area means? Asking for a friend. Mo, so the value area for London is nothing more than the distribution curve, so where most of the business yesterday was occurring, right? So if we have a look at ES and its own London value, we actually have it from 57.60 all the way up to 57.70. So effectively just before this whole thing was happening during the New York session. So I'm going to take a little line here and go 57.60 change the color to purple because I like my value areas in purple. And then 57.70 ballpark as another line. Now, if you see how, so I'm going to mark the times as well in a minute. And each regular trading session will have their own thing, right? They will have Tokyo, Asia session will have its own distribution curve. London has its own. And then obviously we have the regular trading hours that also have their own. Now, if I go back to when London actually started trading, this was the start. So you can see that they actually didn't move it anywhere. And most of the business was transacted ballpark in this area. Now, what is the value area? It is a 70% of the area where most of the business took place. But it's literally just a distribution curve, right? We distributed the most time at those particular prices, and then we take 70% of that. So hopefully that makes a little bit more sense. Study of market profile is nothing more than study of distributions and how far or near we are to those reference areas. So are we inside it? So therefore in balance. Are we outside it? And, are we too far out? Is it a reprice? And right off the bat, that tends to stop you from doing stupid trades if you think you're seeing something. So market profile to me is probably one of the only concepts that can tell you when you're clearly wrong, which is not something you can say for anything that's like a singular line on the chart, like a VWAP or something. Now, VWAP is pretty reactive, but again, if you use that wrong on, let's say, a neutral day type, VWAP won't matter. It's going to be, the price is going to be wagging around it as if it's just like not even there. And people are like, oh, why is VWAP not working today? Well, it's because it's a neutral day type. So VWAP should be a target, not the starting point. So, little things like that, they can help you work out what the best scenario is for the day. What's my setting on the volume profile? Just the ballpark same thing that you get as soon as you plop it on the chart. So I didn't change anything. I think maybe I changed some colors. But apart from that, the volume profile is the volume profile visible range, VPVR. The pirates profile. Okay, did I answer that? Yes. Let's see the next one. Eddie says, good morning. Can you please walk through your entry criterias? Break and retest, etc. What is your stop loss parameters? My stop loss parameters are usually taken from formulas of volatility. So, I trade multiple things. And I don't want to say to people, oh yeah, well, I definitely use like a 30-tick stop on crude oil, when in reality that will shift depending on the volatility shifts, right? And I have a volatility formula that I use to help me figure out what's the appropriate stop loss for that particular product so that it's neither too small nor too big. So I aim for ballpark kind of golden middle when it comes to risk reward accuracy and my stop loss sizes, right? So my stops will reflect that, meaning that I will not use at super tiny stops of like 5 and 10 ticks, because that's not going to enable me to catch some of my bigger D trades. I consider a scalp when I capture 30 to 50 ticks. That's a scalp for me. And then I consider a intraday swing or semi-swing, as I like to call them, whenever I catch between 70 and 100 ticks. But again, those don't come as often, so you have to be pretty selective over when you're going to get involved. And this is why, for example, if I look at crude oil, I know that I don't have a good level here, even though it's breaking out. But it's like, I don't care that it's breaking out. I want certain things to happen within the setup and within the reference areas that I want, not what the market is going to give me. So the only level that I can see of interest today would actually be closer to 70, 75. So all the way down here. So we're nowhere near that, right? Now, some people, I've had this in my coaching plenty of times where some people are like, hey, Dee, I have, like, let's say a 3-bar reversal somewhere, but I'm going to short it up to the 3-bar reversal, and then I'm going to go long from the morning star. So going short towards something that's already reversed, that's actually a very high risk trade and very low probability. You don't know whether it's just going to keep going or not. So the high probability trade here is if, so not when, but if we happen to arrive at 70, 75 level. A low probability trade would be if you go, well, I have a level down here, I'm just going to short it down to there. You don't know that. There is no edge to be had in this area. I have an edge here. I don't have an edge here. So I don't know whether that's clear to you guys. So let me know. If it isn't, I will break down more. But basically, chasing price up to a high probability level is a low probability trade. However, if and when you are at the level, that's where your entry criteria should kick in, okay? Now, sometimes these levels will act as magnets, but you need another orientation point with another different high probability level, which in my case would be some kind of an exhaustion area. So for me, maybe 72.50, this is, something to have a look at, because that is where the average session range from London will get exhausted. Apart from that, I have nothing in between. So if I were to just sit here and start clicking buttons, which most people do, I'm not going to have anything. I'm not going to have good accuracy. I'm certainly not going to have 13, 14 days on the bounds of not losing. So you have to be selective. If you're aiming for consistency means that your entry criteria should only be done around the levels of interest, not away from them. So once we're at the level, that's when I want to see a particular type of setup. Is it a failed auction? Is it an auction fade? Do we have a neutral day type? And all of those will shift my target expectations. Some of them will be more scalpy, where I will only aim for about 35 ticks. Others will be bigger opportunities because the market has presented me a bigger opportunity. So I'm very flexible, and when I look at the market, I try to be as objective as possible. And a part of that is to not get FOMO and to purposely miss some moves in order to obtain the higher probability trades. So me chasing here longs because I think it's breaking out, that would be FOMO. Me waiting for either a 72.50 level or 70.75 level, that's being a market stalker, right? You're stalking the markets. You're not chasing. You're not a lion just kind of going, rah! Which again, most people do. That's how they think they should be trading. But I have the ambush predator stance, right? I'm like that chameleon, my Bob the chameleon that we have every day as an intro. Why did I choose a chameleon? It's because of the way they hunt. And they have a very high accuracy, bizarrely. Did you know that lions have a 30% accuracy at best at catching their prey? Because they're chasing, right? So a lot of the times they get knackered and they're like, I guess I'm going to be hungry today. But chameleons, what do? They just sit there and they wait for the fly to fly by, and they just go, nope. And that's it. So that's what you want to be doing with the price. You want to sit there, stalk it, wait in shadows so that nobody knows you're there, no limit orders, nothing. And then once the price is there, then you pounce. You're like, okay, now we're going to see what's happening. Where are those market makers and how can we piggyback onto their positions? Because that's all that we can do with these sorts of sizes. You're not going to be moving the markets. Your mate Dave, trading 15 lots on an XFA sim, is also not going to be moving the markets. I'm sorry to break it to you. Sorry to burst your bubble. So the better way is to just follow what the other institutions are doing. Now, there's different ways of doing it. Rips likes to chase momentum, but not chasing. He also has levels, and then he just looks at very short-term moves away or up to those levels. And he's only in trades for a very short amount of time. That's his style. I like to be in trades for at least about 40 minutes. And I like to catch a bigger portion of the trend if there is one. If there isn't one, I will then default to a more scalpy sort of side of things. But even then, my trades will probably last about 10 minutes. You know, they're not going to be seconds or minutes. They're going to be 10, 15, 20, half an hour, you know. But you have to remain objective. You have to have a lot of mental control. You have to have a lot of introspection going on. So, you know, you have to know yourself, what your triggers are. If you lose a trade, how do you behave after that? That is the real measure of a good trader. Not how many trades you do or whether you're 70% accurate, but then on that one day you lose 30R, you know, and you derail your entire account. That means you're not ready yet. It means that your mental side is not ready for whatever you're doing, right? So try to trade products that don't elicit emotional reaction. If anything is bringing up an emotion in you, it's probably not a good fit for you. Because you cannot have emotions. You cannot trade from fear, doubt, elation, euphoria. That should be left for parties, casinos, you know, somewhere where you can have a lot more fun doing it. But being alone in a room and sort of trying to ride the high of the adrenaline because you just full ported it in like 10 contracts and you managed to catch a tiger by the tail, that is not a good way to live. It's kind of like drinking alone. Don't do it. So gravitate towards the products where you can completely and objectively stay calm, cool, and collected. And one thing I can promise you, this is not a signal service, but one thing that I can promise you is that if you trade without emotions with smaller size, you will see better results. I've seen people who trade 3, 4, 5 lots on minis, and they're averaging $200 per day. $200 per day. Do you know how much risk it is to use 3, 4, 5 lots? It's crazy. Like I can do 200 lots, $200 on 3 micros. I don't need to trade 3 lots to average $200 per day. So, you know, there's the risk side of things, and then you have to look at it from the point of view, well, how can I risk as much as possible, but gain as much as possible? That's where the risk managers salivate over, right? They're like, wow, this person is averaging. So which one would you take? Like if you were running a prop firm, you have a guy that's like pull porking at 5 lots all the time and averages $200 to $300 a day, whilst also suffering horrendous drawdowns. And when he loses $3K on the day. Or a guy who trades small, or a girl who trades small, only using 3 to 5 micros, but generates about $300 to $400 per day, and only ever loses about 500 or 600, right? When it happens. So who's going to have better emotional control? The guy who's like up and down roller coaster, rah! Let's go. Or the person who is like super controlled, trades within the means of the account, and you know, doesn't freak out and can ride out trades when they present themselves, but is also not afraid to take sort of base hits, right? Which one would you fund if you were the risk manager? I know which ones I gravitated towards when I was trying to get my own prop firms from the start. You know? So think about it from that way. What's with gamma levels is different to an option level. So gamma levels is usually a level where the most gamma exposure is. And again, those are all levels where market makers have to get involved to hedge their own positions because their inventory gets a bit out of whack. So they have to start to readjust, And then you have something like the high volume levels where that gamma exposure can actually flip from negative to positive and therefore change the entire day's state from a low volatility to high volatility and vice versa. So that's the difference. Do you go through a trade without taking a trade? I would say no, because of the way and the products that I trade. So I trade about 5 or 6 products. I have DAX, I have crude oil, I have gold, platinum, copper. And then towards the end of the day, if I haven't, if I really want to keep going or I'm on power hour or something, I might even look at ES. You've seen me trade ES many times. Now, some of my students, they do trade YM, some of them trade NQ, but a lot of them have actually moved away from it, which I'm pretty happy about. And then so, I have to watch multiple products, but my specialty is energies and metals. I also look at RBOB if I feel gasoline futures, if I feel that crude oil is a little bit slower, and maybe we're in the time of the year where the crude oil derivatives might have a little bit more demand for that particular season. However, do I ever go without it taking a trade? Not unless it's like elections or FOMC or something like that. Then I will consciously stay out of the markets. I will not trade. Yesterday, I did one trade. So I did one long copper, the one that I discussed with Coach Jay yesterday. And that was the only trade that I did on this account. That I started to do the XFA thing, but then I decided to take a payout. So I'm waiting for that to get processed, taking down. There's about $9,000 in there right now, so I'm going to take out just under half, and then I'm going back to micros for a time to build it back up, and so on and so forth. Our live accounts are locked up, so we can't even trade that today. So yeah, it's it's one of those things. If you only trade one product and you don't see a good setup, then you're not going to trade that day, and you have to be okay with it. With experience and with systematic approaches, it's much easier to switch from product to product. You see people like Coach Jay, Dakota, myself, we trade multiple things, right? And that's because ballpark, we're looking for the same setups, but we know what we're looking for. You're looking at the combination of, people who have traded 10, 15, 17 years, right? So it's not going to come overnight that you're suddenly going to be able to flip and flop between the products and go, oh, this one's great. Oh, this one's also great. Because then you're going to find yourself in a position where you're over leveraged on metals, for example. If you're looking at platinum, copper, gold, silver, all of those are a part of the same asset class. So if you think that you see the setup in all of them, you're going to be like triple exposure into the market, and then one move can just wipe you out. So you have to be aware of the exposure that you're taking across which asset classes. Similarly, if you are, for example, looking at gold and equities, and you go long in equities and short in gold, you're actually double exposed, because on some days they actually have a perfect correlation where they go in the opposite directions. So be very careful if you want to try trading multiple products. I wouldn't really suggest that. I only started trading multiple products probably about 8 or 9 years into my career. So nearly an entire decade went by before I was like, okay, now I can trade GBP New Zealand in the Forex, and I can trade crude oil, and I can trade gold. But at the same time, I can also look at ES and find some very good, it was nearly a decade before I was able to do that. Why? Because I spent time with each product, extended amount of time, only trading one thing. I traded Eurodollar for 5 years. I then traded crude oil for about 3 years. I then added gold for another 2 years, right? So eventually you get to know those products really well, and you start to figure out the setups that work best for those particular products at this particular time of day. But it's not going to come overnight. It's a matter of experience and hours spent trading one single product. So if you want to get there faster, I have a tattoo on my arm that says in Serbian, haste makes waste. Less haste, more speed. Yeah? So if you're rushing and you're blowing up XFAs because you want to be rich yesterday, that's going to mean you're going to extend the time to abundance, right? Extend the time to payouts. But if you take it slower, even if you spend a month getting there, 2 months, 3, 8 months, you will develop the skills that the guy who's trying to pass in 2 days, do or die, will never develop, because they're constantly in that euphoric, I must pass in 2 days. Now, it's different if you're an experienced trader and you go a little bit heavier on the size and you pass in 3 or 4 days or even 2 days. And I've done that. I have done that because for me, it doesn't really, it's just, at this point, combines do nothing for me. Yes, I can remove risk on, for the US elections and trade that, but largely you're not going to learn anything if you keep going for the 2 day. Just because you can pass in 2 days doesn't mean you should. You're not going to learn anything. And I get people constantly going, oh, I can pass challenges, but then I blow up an XFA. Yeah, why do you think that is? Well, I don't know. How long do you take to pass a combine? 2 days. Have you ever kept a combine for longer than 2 days? Well, no. Well, how do you expect to keep an XFA more than 2 days then? Because you don't have the skills to keep it. You've never worked on those skills to try and actually maintain an account. Oh my God, shock horror, right? To maintain an account for longer than a week. So when you get into an XFA or in a combine, the first step should be don't lose it. Don't reset until you absolutely must. Don't go full size in an XFA, and don't go swinging for the fences on that first day. Size down, start with 1 micro. If you have an XFA and you want to maintain it, the only way to do that is to start slow. Jay yesterday, so somebody asked both of us, what would you say to your younger self? And Coach Jay very, very wisely said, slow down. So slow down. Slow down and you will see benefits from spending more time grinding it out, because those are the skills that are necessary in an XFA. Those are certainly the skills that are necessary in a live account. When the stakes are super high, you're in the live market, the fills are not the same, nothing looks the same, everything is different. And you do get used to that as well. You do get used to that. Dee, what are your must-have EMAs? I don't think that any EMAs are must-have. I think a must-have is market profile, personally. Could I live without the ribbon? Yeah, absolutely. Do I use any other moving averages apart from the ribbon? No. Again, shock horror. Dee doesn't use EMAs. So the only way I use EMAs, these are 9 EMAs set to high, close, and low. They never cross. And I use VWAP, which is, I suppose, a form of a moving average, but it's weighted with volume. In fact, that's what it stands for, volume, weighted, average, price. So apart from those, I don't use any regular EMAs, so I don't use a 21 EMA or nothing like that. And the ribbon that I have on here is literally just for timing. So I use that on a 100-tick chart. Once it arrives at my level, like ballpark, let's have a look at crude oil now. I'm going to do a nonsense trade here, just to illustrate how I would use these. So we're on a 100-tick chart now. I have my ribbon. I don't have a good level here, but the momentum is slowing down, right? There is a localized volume point of control here, so we are building volume and we're trying to go below it. So again, some volume profile readouts definitely do come into play. We are a little bit far from 72, but not super far. It's not like it's like 50 ticks away. We are only 10 ticks away from that, and the high, localized high, is 72.04. So what would I want to do here? Well, if I'm saying that this is gonna maybe go into a short down to at least the initial balance, so maybe even VWAP, which is at 71.64, I can look to see whether these turn around. So whether the price is going to start picking up momentum and dipping below my ribbon. So that's how I use it. So this is not a level, but merely a momentum read tool. So do we have momentum? And same thing with my DMI at the bottom. Don't know whether you can see that. Yeah, so DMI at the bottom does the same thing. It's a timing tool. Now, some people like to only use the middle line, the middle 9 EMA for a momentum. And then when one of the candles crosses over, that will be their entry. For me, that's not quite enough because I look for some slightly bigger moves. And if I'm going to enter a trade based on this structure, there's a couple of ways of doing it. If it's more of a reversal trade that I'm not sure of, I will wait until we close below these and then one more candle actually opens and closes outside of the ribbon. Or I can look to sort of do a bit of educated guesswork where I will say that we've already turned around at 72, so maybe next time we're going to turn around there as well. And therefore I will look to enter there and then look for that smash through the ribbon as my continuation of the idea that I initially had, which was a short from a round number of 72 where we already saw some selling stepping in. So again, working sort of within a range and staying aware of the structure of the market that we have at the time. And then either using using the ribbon to get involved or to scan as a part of the OODA loop or OODA loop, however you want to pronounce that. I like to say OODA loops because I like to spell things out. So yeah, but must EMAs, I use some more elaborate order flow tools in my trading. So the EMAs are not really that important to me. I do look at the 100 DMA, which is a daily moving average over 100 days on equities because they actually work pretty well. And for the most part, equities will they will have a contract that lasts for 3 months. So you will actually have 100 days to work with, which some of my products don't really have because they change every month. Okay, so now we are seeing some reversal around the volume, localized volume point of control. If that continues, I can then say, well, okay, some sellers have come up around this high and not around this high, so maybe we have lower highs, and then maybe we can get down all the way to VWAP. But for now, they're sort of undecided. They're just floating exactly at point of control. So before I get involved, I will want to see a little bit more initiation commitment from the market makers with deeper pockets so that I can ride their coattails, right? Little D on the back of market makers. Nobody can see me, man, because I'm so small. Procoder says, you're the... Oh, thank you. That's a very nice... Very nice comment there. You are the best thing that happened in my life trading in Topstep. You're awesome. Please continue sharing your knowledge. Thank you. That's what we want to see. This is why we do this. Trading can be a very lonely venture. And, who am I going to transfer this knowledge to? What? When I go to my grave? No, I want people to share knowledge. Shared knowledge is great because if you don't share it, you're just gonna lose it, right? Somebody is gonna go, okay, this was a great methodology, but nobody knows how this person did it because now they're gone, long gone, and we don't have anything that was transferred to others. So I would like to transfer, I don't have human children, so I wish to transfer my legacy to the trading community. This is why I started with the courses and everything. And I found that I enjoyed it. You know, yes, there's the monetary side to it, of course, because we're not a charity. You know, everybody loves money, right? I'm not going to sit here and pretend as a trader that that's not true. We stay for the money, right? But on the coaching side, money is beside the point, right? On the coaching side, the best thing that you can have as a coach is to see somebody doing well and to see someone who took something you said, it resonated with them, they implemented it. So it's always the trader that does the work. I can't do the work for you. I can share my experience, but you're the ones who have to actually do the work. And when I read something like this, it really does warm my heart. It means that, okay, somebody is actually listening, and whatever I've gone through, all the pains that that inevitably you go through as a trader, somebody took that and went, I'm going to use that. This is great. And it helps them, you know, it helps them. All right, let's see what happens here. So if we close, now there's a risk here that if we close and then they bounce it back up, it's always a risk, right? But at least we have some sort of a higher low again, and we're trying to dip below those little areas. So I'm going to pop in a little trade here. But there's a bit of a spread. So this is already thinner markets doing their thing. And I always start on crude oil for this type of liquidity that we have at the moment on a 35 tick stop. If the liquidity goes nuts over 2 weeks, I might use a 45 tick stop. If the liquidity lowers, I might actually go all the way down to a 17 tick stop. So it's very, very dependent on how the market is behaving and how much movement we have. All right, so now we've dipped below this ribbon. Now I would like to see at some point this DMI going higher. Because yes, we're going in a short, but DMI doesn't care about the direction. It will print the red bars or pink bars as it goes into a sell. But the DMI, the ADX and the DI indicator, that moves up. So basically the volatility goes higher. So it doesn't care about the direction. It's just measuring the strength of the move. And it's sort of picking up a little bit, but so far we're still not getting any initiation. And, you know, I wouldn't expect miracles at this time of day, especially not waiting for elections either. But we might get down to VWAP. So this is more of a scalp. And in fact, let's just move that immediately there. And because it's a scalp, we don't want to make it a negative risk reward. So I am actually going to move my stop to 15 ticks. And now we have a positive risk reward. And because it's a smaller stop, like basically even half down, you can now increase position size because you're still risking the same amount. You're still risking about ballpark 3 to 350. But you're aiming for less profit, quicker profit, and therefore, even if you get hit on the face, you're still getting hit for the same amount. So I'm in with 2 lots, but my risk is still the same. Okay? Very, very important distinction. You cannot go increasing your risk willy-nilly, and then one time you risk 300, another time you risk 3,000, the third time you're going to risk 1,500. Like, that's too random. And then you come to me and you go, oh, I'm not making money. Oh, you're not making money? Really? That's so odd. Don't know why that is with all of those parameter changes you're doing. So stay consistent. Risk per trade. Use structure. Risk first, guys. Nothing else. Risk first. Like I said, this is a bit of a nonsense trade because I don't actually have a level. I'm just illustrating how I read the ribbon. You know, you're not supposed to just randomly enter a trade, but, you know, for educational purposes, that's how I would use it. So I would now look for that move to VWAP. Whether it gets there or not, obviously nobody knows. That's an unknown. You know how you have equations with 1 or 2 unknowns? That's it. Is there a decent chance of going to VWAP? Yeah. But what do we have against the trade? This is a game I like to play. What's against the trade? Well, we're above the initial balance. we succeeded in an auction, right? We are above the first hour of trading. We're hanging above it. We're not moving away from it. So that's a pro for this particular trade. So we haven't moved far. We are literally just trying to break out, but there's no initiative. And this is why this trade sort of ballpark situational awareness and all that does have some merit. So it's not completely nonsense, but it's not the strongest setup. Okay, so just going to make that perfectly clear. So even if I lose this, I'm not going to be surprised. But at the same time, I'm controlling my risk. I'm using the structure, using the ribbons, and just trading what's already there. So while we wait, let's see. Peter Pandas wants to ask, do I have a specific trading schedule? I have read that it makes sense to limit the screen time. Well, I mean, obviously I trade through 2 sessions, and sometimes I have Thursdays when there's a lot of stuff going on. I have 2 appearances. Sometimes they ask me to stay for power hour, and that's a long day. So yes, naturally I will have a schedule. I actually have a scheduled power nap, where I listen to Yoga Nidra. So it's kind of like a meditation and a power nap all in one even. And that tends to refresh my brain for the next session. However, I try never to have more than 4 hours screen time per day. Then that could be difficult, So I have other things that I do in life, I do stare at charts, but I don't actively trade for the entire day. If I'm going to trade, I will look for my setup in about a 90-minute time period. I call those the day trading time zones. And again, those I explain to death in my pro development program. I just cannot fit all of that into a singular YouTube video. I will be literally sitting here for the next 20 hours explaining the intricacies of the time windows that I use and why I use them. But just know that they are based on actual observed market movement. It's not just random, I'm just going to sit down and trade for 90 minutes now. So it's not like that. There's certain things that happen throughout the day that are just a part of market mechanics. Whether it's a lunchtime, whether it's a take profit move, whether there's something going on with the options expiries, there will be a reason why those time zones are set out that way. And then each of the products has its own little time windows when setups work out better. All right, so now we have one candle that actually closed below the ribbon. But we still need to break this low. So we still have this range structure at 71.77 that needs to go. Without that, we're still in a range bound market until something else changes. But for now, we have a little bit of movement. So what's this DI indicator doing? It's growing. So it's rising. Now, if I can also get the ADX to rise, the white line, now then we have something, right? And by then, this trade will be over because it will be there. Okay, so both of them are rising now. There we go. And if I was a scalper, this would be it. You get that one flush down, you take profits, and you're done for the day. But I'm not. I want more. I want a little bit more because the structure says we have demand around VWAP. And then that's the next logical clue. Now, this could take a while. It doesn't mean that it's going to happen immediately. However, we have everything I was looking for. We have the close below the ribbon. We have the increase in the movement. And we now wait. There's nothing else for me to say. It's like, there's nothing else for me to do until the state changes. We're just going to ride out the move. I will use the ribbon to also get out of a trade early. So let's say that for the next sort of 500 ticks, this doesn't move anywhere and we get a reversal. And then a very strong candle. Let's see if I have one. Here is one here. So if you see this one, it pushed very strongly above the ribbon. So if I get that, that's my early exit wherever we are. And that means the trade, in my eyes, is failed, but it's still a profitable trade. But it's going to be like a small sort of either break even sort of scratch trade, or a trade that maybe has a minor loss. but that would be one way to control that. That's why sometimes when I'm on with others for like Trade with Topstep or something, I will say, bail now, because I will see that happening. All right, let's take a couple more questions and then get out of here. Let's see. Do you really need a coach to succeed in the industry? You know what? Without my mentors, without people who were around me, helping me in the prop firm, and then later on Hogue, I wouldn't be anywhere. So can you do it alone? Yeah, but it's probably going to take you 20 years to get there. So it's down to you. Do you want to go at it by yourself and extend the time to profitability, consistency, and making all of the rookie mistakes that a good mentor can actually warn you against and actually tell you, hey, you're having troubles staying in trades because that's a mental issue. Have a look at this sheet. Well, let's work with your mental triggers. Wouldn't that be easier than you spending the next 10 years being a scratch trader? So what's more valuable to you? Time? Time, getting there a little bit quicker with the help of a good coach, or going at it alone. Like it's totally possible. Don't get me wrong. It's entirely possible to get there alone. But it is down to the type of person that you are. So some people are excellent in their own right, and they can, just get a course and get things out of the course without the help from anyone. But those sorts of individuals tend to already have high-level skills elsewhere. In my experience, those sorts of people are usually doctors, engineers, even chefs, because chefs have this whole timing technique, long hours. It's a very hard thing to do. Pilots as well, anything outside of trading where you have to have great memory, really good under pressure, and to be able to learn stuff and be very observant, because let's face it, markets are half the battle is observation. That's it's something to ask yourself. Do you have enough skills and introspection in your life to be able to go at it alone? I'm going to say no for most people. I know that I didn't have that, certainly not when I was starting out at 27 years of age, right? And yes, it was a long time ago. Maybe if I were just starting to trade like now at 44, maybe I would say, yeah, I think I have enough maturity, enough observational power, enough life experience and other skills to try doing this alone. But even so, I would still rather ask Hogue about stuff relating to, something like volume delta. I'm still not a specialist in volume delta. Like, I know that Hogue uses it. So what do I do when I see something odd happening with volume delta? I will go to Hogue and I would go, hey, can you tell me what do you reckon's going on here? And then I would say, this is what I'm seeing. Like, crude oil just the other day. It's like, negative delta growing, but the price just not really doing anything. And it happened for the entire day. And Hogue said, that's the larger time frame participants trying to get everybody short so that they can like smack it into a long. It's exactly what happened. I sat on that trade, probably not all the way, but I took like a good sort of 60 ticks out of it. So what was I supposed to do? Pretend that I know anything about, volume delta and how I'm an expert in it when I'm not? Or just ask my mentor. Just go, hey, can you help me out? To me, that's much easier, right? But each to their own, obviously people are at different financial states as well. If you don't have $5,000 to give to a coach, maybe just stick with Topstep. We do offer a lot of free stuff, but it's not exactly one-to-one. It can be for some parts, it can be. But, if you want a really specialized, tailored approach, that's kind of like going to a therapist and then paying for their time, right? It's not, oh yeah, why are you charging for this? It's because it's our time, it's our expertise, right? I certainly don't want to, sit and be engrossed in other people's problems if this not some sort of an incentive there, right? Everybody works in the same way. Everybody works in the same way. But if you find that you can do that, you're very observant in your journaling. You're keeping yourself accountable. You don't have a problem with reviewing your stuff and going, okay, review today. Then tomorrow I'm going to track more trades and then see what I've done wrong. And then take that into the next day and make it into a task and then keep going. You don't need a coach, okay? You don't need a mentor. You don't need anybody else. You already have the skills to do that for yourself. And then it's just down to maybe getting some good levels from someone. You know, what sort of levels does this person use? What sort of levels does this person use? And then you kind of try and develop your own system. But just be careful, because system design is, again, another specialty thing. So if you don't understand the relationships between things like accuracy versus risk reward versus number of trades per day versus the sizing, you know, all of that is a measure called the risk of ruin. And you can do like Monte Carlo simulations to see how long you would survive and what sort of random distribution of probabilities you can run into over thousands and thousands of trades. And if you can do that, what do you need a coach for? You don't, right? However, if you don't have those skills, that's where problems start. You're going to be spinning your wheels for literally 5, 10, 15 years. I've seen people not profitable for 20 years and they're still like, I don't need anyone. It's like, well, do you want to make money while you're still young? Or what are we doing here? You know? So yeah, that's just some of my thoughts there. I know that mentors have helped me a lot. But, you know, to each their own, right? If you have the means to pay for a coach, just be careful, because this industry is also laden with scammers. So I will say that you have to be very careful who you choose and who's going to be your coach. Luckily, Topstep vets all of the coaches that we have here. But if you're looking for a more specialized service, just be very careful, okay? That's it for today, guys. Don't forget, we have some other lovely programming outside of the regular trading hours. We had Coach Jay here with us yesterday. So check out At the Buzzer. He does that every single day, Monday to Friday, with Coach Paul. And they also have special guests along the way. We also have Slow Markets with Coach Dakota. And we have Market Kickoff with Nick for a Tick. We've seen him. We love him. He is an awesome dude. Very funny, very sarcastic. I absolutely love that guy. So if you haven't seen Market Kickoff on Sundays, do check it out. It's very valuable because he actually does a large time frame analysis. So not just scalper stuff, but you can see where he gets his levels from and how he gets the overall sort of bird's eye view. Very, very useful. He is one of the few scalpers that is profitable. I'm going to kill this trade. There we go. We made 313 on this little scalpy thing ahead of the elections in the combine. So let's keep pushing. So yeah, check out all of the programming that we have. I will see you again tomorrow. That's going to be an interesting one because we're going to have the elections aftermath. And follow us on Instagram as well, guys. We have the Topstep Instagram page. I'm also going to keep pushing the Eurex posts. So make sure to upvote Eurex. Let's get that at least to 400 or something. Otherwise, we'll never get Eurex. We need DAX, guys. We need DAX. This is great. Great stuff. It's a great product, and I really, really miss it in Topstep. I do wish that we can get that super quickly. So yeah, that's it. Thank you for hanging with me, guys. That was very, very good. We had many, many great questions. You guys are absolutely smashing. I can see that you guys are growing with this stream. So let's keep that alive. You know, tell your mom, tell your dog. Let's get everybody onto London. Subscribe to TopstepTV if you haven't done that already, and give me a like. That helps to grow this whole segment and to hopefully keep doing this for at least a few years. I will see you tomorrow for another London session. Until then, let's see what happens with these elections. Don't trade like a lunatic. Be less grasshopper and more market stalker. until it's all over and done with, and then you can do what you like. That's it, guys. Take care. I will see you tomorrow.